investmentstrategy.com.
Hello, this is Daniel Grady with a brief look at the markets for today, Monday, January 27th. We'll start with a look at the economic calendar, and we have a pretty eventful day coming up. At 9 o'clock GMT, we have the business climate data coming out from Germany, which is an important economic indicator for the Eurozone. It doesn't show up here on the list, but at 1:58 GMT, we have PMI market services data coming out from the United States. And then at 3 o'clock GMT, we have new home sales from the United States. Moving over to the markets, we have a strong drop here in the S&P 500. It dropped by 2.1% on Friday and closed below 1,800. There's several theories as to why this drop was. One was because of continuing fears of market valuations with the American stocks being overvalued. This is following an over 30% performance by the S&P 500 over the last year. And the other theory is that this is due to investors taking profit because most of the stocks that dropped significantly were the stocks that had achieved new yearly highs, and so this would be investors taking profit over the move over the last year. There isn't much data coming out today which is expected to have a major impact on the stock market. And also going through the Asian session, we continue to move to the downside as investors are pulling out of emerging markets. But futures for the S&P 500 are trading up by 0.2% at the beginning of the session. And today we have a host of earnings reports, the most important being Facebook and Apple. Moving over to the euro. The euro tried to push above 137, but didn't manage to hold that position. It's currently trading above support at 136, and we have resistance at 137. The pound, as expected, dropped on Friday after this strong move on the upside. This was most likely a correction. It tried to push through where we have support here at 164.90. It's currently trading just below 165. If it were to eventually move above this level, we could see it going back towards 166, or it could drop down to the first Fibonacci retracement level here at 164.30. The yen has been gaining significant strength over the last couple of days. Again, this was due to investors moving out of emerging markets as we've been getting consistently negative reports, especially coming out of China. It moved down, the dollar yen moved down to support here at 102.30 and has since bounced back. We could be expecting this to move. The overall trend continues to be slightly on the downside, but we could expect this to move up towards resistance at 103.30. If this level were not able to hold, it might push back down to the next Fibonacci retracement level and support at 101.30. And then finally we have gold. Gold pushed up on Friday to 1,272, just above our targeted resistance level. Bias for gold continues to be on the upside, both as investors continue to withdraw from emerging markets and the continued demand for gold from China, at least to the beginning of the Chinese Lunar New Year, which is on January 31st. We still have support at 1,240 for gold and resistance at 1,272. If we were to break above that, then we'd be targeting 1,292. And that's it for today. Thanks for watching and happy trading.